Hey everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's drstocks.com. We've been in business every market day since October of 2002. And if you're interested in joining us in one of my live trading rooms or subscribing to one of my award-winning stock pick advisories or learning how to trade, I sell trading systems and trader training materials. Go over to drstocks.com. You can click on subscribe. This is coming to you today from the live options room. You can join us there. Great group of traders at all different levels, some who've never traded options before and some who trade options for a living, and everybody in between. And if you want, you can add on our flagship room, which is the live trading room. Been in business for over 5 years now, and you can do that at a discount. Okay, so we're going to look at some charts today. We're going to jump over to TradingView. And the first thing I'm going to do here, just to give myself a little bit of a challenge, is I'm going to erase all of the indicators that you see here with one exception. I'm not going to take off the moving averages. I've got on the linear regression channel here. It's the overlay in the background. Let me get over to the indexes. There we go. Get rid of all those lines. And the 21 EMA, the 50 SMA, that's the black line, and the 200 SMA, that's the big thick green line there. The linear regression channel set at 1.5 and 2.0 standard deviations gives you a nice little pink buy band down here at the bottom and a sell band up on top. We've got the MACD indicator down at the bottom. I'm going to take that one off, and I'm going to leave the volume bars on there, but I'm going to, for now, just get rid of the linear regression channel. And we're just going to look at price, just pure price with moving averages. Now, this is the S&P 500. It is trading today again for about the 6th, 7th day in a row at new all-time highs, having broken out of the previous high back here in February. So the February highs have been exceeded. And, you know, when that happens, you kind of have to ask yourself, is the economy at a better place now than it was back in February? If it not, if we're in a weaker place or growth is slowing down or there are concerns, systemic concerns in the economy, then the valuation of the economy will not sustain this breakout. But I have to say, it's not the most robust economy that I've ever seen in my lifetime, but it is a good one. And it's firing on most of all cylinders. And the thing is, here's the market, right? The market is always thinking forward. It is a future discounting mechanism. So the market's not really worried about what happened last week. It's worried more about what's going to happen in the next month, 2, 3, 4 months. And when we look out at that time frame, we really see a lot of good things that potentially could happen, right? Tariff deals are going to get cut. Rates, interest rates are likely going to come down. At least they're not going to go up. Companies are going to start reporting earnings, and those should be pretty good. Yeah, at least they'll have a better forward look than they had last quarter. And yeah, and we've had some really good things going on in the economy in terms of like IPOs, mergers, acquisitions, right? Share buybacks. So there's a good macro for the market right now. It's not the best we've ever seen. That was 1999, but it is a very good one. And last thing I meant to say is that we do have, and you always need this for future growth, we do have a new tech sector coming online. It's already online, but it's really in its early days, and that is the whole AI economy. And that is just beginning to kind of filter out, right? We had the dot-com era, and then we had the Internet of Things, and then we had the cloud, right? And now the latest thing is artificial intelligence, and all companies are beginning to use it now. And so the companies that supply that stuff, i.e. the data centers and the networking and the high-speed fiber optics and the energy to run all this stuff, those are the guys, the picks and shovels guys, that are going to do really well in the future economy. So yeah, it's reasonable to assume that we're at good valuations here, and with all of that on the horizon, we can see the market sustaining itself. However, I just have to say that we've come quite a long way off of the April lows. It's been almost a vertical rise up, and Now we're quite a ways away from the 21 period moving average, and we're way away from the 50 period moving average. And typically, when you get that distance away from the rubber band, it tends to snap back. Now, I don't think we're going to crash. I don't think we're going to go down through the 50 period moving average, for example, but a little bit of a pullback next week or two. Maybe July is a little bit of a more challenging month at the front end, but I do think that it will be resolved by the time we get into the second half of the month. And August should be very good. September tends to be seasonally kind of weak, but that would set us up very nicely for a good Santa rally into the last quarter. So we have to be a little cautious right now. We can't get too chasey. Can't start buying stuff all the way up here at the top. You'll end up being a bag holder, but I don't think it's really a great market to be shorting either, unless you have a very tight time frame. So let's take a look over at the hourly or the 2-hour chart over here, and I'm going to do the same thing with this chart. We can get rid of we'll hide that one. I'm going to hide these. I have on here the 34 EMAs set at high, low, and close, and that's the set of EMAs I like to use on the intraday charts, on the hourly chart especially. Okay, so here's your big up, right? Breakout, up, 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 several days in a row, new highs every day, boom, 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 boom. There was a little bit of a pause right here, right? And a little bit of a break. I remember this very well because when that red bar right there on heavy volume broke the range support, I was thinking, maybe we're in for a little bit of a pullback, a multi-day pullback. And of course, the next hour, it was right back up again. Up, 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 and now we're in another range. We're in another little trading range. Just a little bit of a pause, right? Just enough to take a breather, just enough to kind of catch your breath. And it's a nice looking range, and I don't think we're going to exceed it this week. I think we probably have seen the highs for the week, but we could come down here and test the lows of that very tight little range. Now, if it comes down and hits the lows, that would be a place you could buy again. If you're up here at the top and you don't really want to sit through a few days of drawdown, you might want to take some profits, but that's where we're at. Now, does that mean it has to go back down again? No, of course not. We're just looking at the path of least resistance. It could skirt right up tomorrow, the next day, and we've got some big data coming out on Thursday. All the jobs data is coming out on Thursday, and I think we get ISM services tomorrow, or is that next week? I'm not sure. But there are jobless claims, there's ADP, there's something else that is important coming out before we get to the long holiday weekend. All right, so that's the S&P. Let's take a look at the NASDAQ, the other big index that we like to keep track of. And you can see that this is the daily chart, and it is now showing red. Right, the NASDAQ is leading the way lower. The S&P is flat. The Dow Jones is just going like crazy. The small caps are going like crazy. But I think we probably have seen the top for the week in the major tech stocks, right? Your Apple, Google, Microsoft, Netflix, Amazon. These are the guys that are going to start to cool off. And, if they're not that happy, the NASDAQ will not be happy because it's a weighted index and they're the guys at the very top. All right, so let's get rid of some of these indicators, and you can see that the all-time high was exceeded already. We are trading as of yesterday at new all-time highs. We did not exceed that so far today, and this is a pretty heavy sell-off. It's not looking real good short-term for the NASDAQ. So, maybe in the live options room, we can trade this by putting on some calls on SQQQ just for a few days, maybe into Tuesday, Wednesday next week, something like that, just a short-term trade. But I do think that that range that I showed you in the S&P is going to come back down, and you can see rounded top. Rounded bottoms are bullish, rounded tops are bearish, and that's exactly what we've got. So where are the lines of support? Well, there's a very clear line of support. It was tested twice, right here around 22.6. This is the NASDAQ Composite Micro E-mini, so it's a little bit different than something like the QQQ or the NDX. Tested it twice, bounced up, but look, we're just not feeling it here in the NASDAQ. So Yeah, we probably should put on something bearish in the NASDAQ before the end of the day. Here's the small cap index. It was just up, up, up. It was a not a safe haven, but frankly, I'm not exactly sure why the Russell 2000 is doing so well today, with the one possible exception in terms of a catalyst, and that is that the big beautiful bill passed the Senate this morning, and that's a with some regulations being cut, with taxes coming down, that benefits small caps more than the big blue chips. So I think that's probably why we're seeing a really good run in the small caps. But it looks like it's kind of topped out, and it's probably about done for now. It is a beautiful bottoming pattern. Small caps have been in a long-term downtrend. We're way, way, way below all-time highs. So this is very encouraging to see this bottoming pattern. It is a inverted head and shoulders, one of the most reliable bullish patterns in the market. And it took a little while to break out. It stalled at the 200 period moving average, and today is breakout day. Now, let's see if we can figure out where this might actually, look at this. Okay, so there's your pullback trend line, right? This is all bearish stuff. Underneath that line, it's all bearish stuff, except for the pattern, which is bullish. Breakout, retest, right back up again. So actually, this is looking pretty good. So I have to say, I think small caps will come back in for a few days, but I don't think they'll get below the 200 period moving average. And if you want to get on board on that little pullback, if there is one, I wouldn't kick anybody in the pants for doing that. All right, gold is a buy. It is in a higher low, 50 period moving average reversal, 3-bar reversal, pretty good volume coming in. It's going to act as a safe haven if, and also the dollar's been crashing. I mean, really bad. The dollar's really looking bad. And I don't know if that has to do with the bill, if that has to do with tariffs. I don't know, but there's very little confidence in the U.S. dollar right now, and it is one of the most crowded shorts in the market, the U.S. dollar. Big funds are short the dollar, and I don't know if they know something that we don't know, because something like World War III would knock the dollar way down, but it's been heading down and breaking all kinds of support. So gold is a good place to hedge against that fall in the dollar. And I do think it's going to get back up here to all-time highs in a couple of weeks. Bitcoin, I'm a little surprised it's as weak as it is, but it did have a very nice 3-day run with a 3-day sideways consolidation. We'll call it the starting of a bull flag. And it's holding the 21 period EMA today. So not that I like what's going on in Bitcoin today, because I'm long Bitcoin myself, but I do like the fact that it's holding the 21. It is in breakout mode, and I'm not seeing anything on here that's just horribly bearish at all. And if the dollar's weak, Bitcoin should benefit from that as well. All right, quick look at the mags. Okay, worst to best. So we are short Tesla in the live trading room, and we're really enjoying that. We're in TSLQ, which is the leveraged version bearish inverse fund for Tesla, and it's a very easy way of just ignore that. Yeah, it's not even applicable anymore because my 2-wave did not go where I thought it was going to. I'm not an Elliott wave theorist. I just sometimes play around with it just for fun. All right, so where's Tesla going to go? Well, here's the bad news if you are a Tesla bull, and I am. I'm long Tesla from way, way back. 7-8 years now I've been long Tesla. From my average share price is like $35 a share. So I don't mind this coming back in a little bit. It gives me a chance to average in, or average up, I should say. But this is not a place where you want to buy Tesla today. It has cracked a if you were to look at this at the weekly chart, you're going to see that right there, this is kind of bearish, right? So you have all-time highs over here, really big south traveling, big fall in Tesla. Wow, it's really raining outside. Here's your relief rally, nowhere near the all-time highs, and now you're starting a new leg lower. This could go really low. I don't think it will. 280, which is right about here, is the bottom of some intraday support. It is also a fib retrace level. And there's something else, I think, in the daily chart. There's maybe the 200 period moving average there. Let's see. Hold on. Yeah, so it's just a pivot price, right? It's a pivot low. And if it hits that and bounces, you'll have something like a double bottom there, which you can trade off of. But I wouldn't touch it long until it at least holds 280 and starts bouncing back up again. Otherwise, I'm afraid. I don't think it will because of the bullish catalysts in the company, but it could get all the way down to this very important level down here. This is super strong. This level right here, which is 220. It won't go below 220, and it probably won't even go below 280, but those are the targets, okay? So it's not a long, it's a short. I kind of like Avgo. It's looking pretty good. It's not looking good today. I should take that back. So here was the little, it's a very bullish chart, strong uptrend. You can see the moving averages are just where you want them. They're all uptrending. The 21's above the 50, 50's above the 200, just perfect. And it's been holding above the 21 all along this recovery rally. Here's your little wedge, broke out nicely to the upside, hit an equilibrium, is pulling back down, is probably going to fill that gap, test the 21 again. If it does, and if it holds there and reverses, that's where you can buy it. Let's see, NVIDIA. So I think NVIDIA is going to be okay. It's kind of just topping out with the rest of the market, but it's kind of in its own atmosphere right now, and it's a very bullish atmosphere. So I think I wouldn't buy every dip. Like I don't think I would buy today's dip, but that level right there that it hit, right, which is 150, is a very key. Is it 150 or 152? 152, I think. Yeah, 152. That's all-time highs. It's you can see it was resistance, and then it broke through. So now it's support, and it was support this morning. Yeah, I wouldn't. I'll tell you what. With something like NVIDIA, I would go down to the hourly chart, right? And one of the things you can do, I was showing this to you a few days ago. You use the Fibonacci retracement tool. You got to find the dominant trend here, and that's a little bit of a trick, right? Sometimes the dominant trend starts a lot sooner than you think. Like here's the most obvious pivot low in recent trading, but to get a picture of current price action, I'm going to use this one. And so we peg the low there. We raise up the top to the most recent pivot high. And that line right there is your first pullback line. It's a 382 Fibonacci retracement. And you can see we're nowhere near there. So that's likely where NVIDIA will pull back to. That would break the all-time high, so it would kind of get it underneath support, trap a bunch of bulls, and then it can rally back up again. We're long Google in the other room, and it's been coming back today. My timing into it was not very good, but I think it's going to be okay. Let's take a look at the daily chart. Because Google's been one that, like Apple, has been kind of lagging the rest of the mags, right? It's still well under all-time highs when the Nasdaq is up at new all-time highs. And you've got Microsoft and Netflix. Anything else up there? NVIDIA, right? Microsoft, Netflix, NVIDIA. They're all trading up at all-time highs, and Google's way down here. And not so good, right? Not so good. But some good things happening. So reversal off the rising 50-period moving average on a bear trap. Nice, strong, high volume print all the way up. It was this big green stick with huge volume that got us into the trade. And then yesterday was a gap and crap. So that wasn't real pleasant to work through, but we've got a pretty wide stop on it. And it looks to me like that selling pressure is done, and it should stay above the 200-period moving average regardless. Okay. So as far as the mags go, wait a little bit on NVIDIA. Google is a go, and Apple is actually starting to make some moves. Can you believe it? It's the best of the mags today. Now, here's the thing with Apple, right? It has a couple of ways you can analyze this chart. So all-time highs here, lower high, and then we're still well under that trend line. So that's kind of the dominant trend line. And Apple's not really going to be that exciting until it gets back up above that line. It's not really going to be a safe space for cash until it gets back above. But we can kind of drill down into something a little more short term, and we can look at this tight wedge that developed right here, right? And I've been showing this wedge for a while, and it was all in this apex in here, and I just kept telling everybody it's a no-go zone. Don't buy Apple. Don't buy it. It's more likely to go down and break the support line than it is to break the resistance line to the top. Why? Because it's in a downtrend, right? Everything is trending down. The moving averages are falling, and the LRC is falling, and even the 200 average is falling, which is pretty rare for Apple. So I said, don't buy it. It's more likely to break to the south than to the north. And here it is breaking out to the north. Now, yesterday it kind of peaked up and then pulled back in. And today is the breakout day. So now Apple is back on my buy zone, my go zone, not the no-go zone. However, there isn't a whole lot of space between where current price is and that trend line. And it's not going to go straight up. It's going to go in an angle. And so, maybe it gets up to 215. And right now it's at 208. It's a 3 or 4% move in Apple. I'm not so sure I would be that excited about it. So I would look elsewhere for a trade until it gets up above there. But if you are a long-term investor, like I was for a long time, and I no longer am in Apple, I just think their product line is not that great anymore. But if you're a long-term investor or still believe in the story of the company, then I would be buying shares. Yeah, I would. I would be adding to my position down here. All right, real quick, because I really got to go. Green's list. These are charts of interest. A lot of these are like fast-moving momentum stocks. A lot of these are meme stocks. Quite a few of them have good fundamentals, but most of them have questionable fundamentals, shall we say. Big growth, right? Lots of growth. But in terms of valuation or, are they even making money? A lot of these aren't. Then, yeah, you have to be a little careful here. These are higher risk, higher reward sorts of setups for the most part. Now, there are a few exceptions in here also. Let's go with the worst, NBIS. We had a position in NBIS in the other room. We took our profits on it when it got up here. I think it was yesterday or maybe it was last week, I forget. And a big slam today. Now, when you have a good uptrending chart and there's a lot of attention on this name, the analysts like it. It's getting a lot of press in the hedge fund world, and there are a lot of people on Twitter and social media with big followings that are talking a bit about this stock. So if you're interested in it, don't buy it here, but drill down to the hourly chart or the 2-hour chart, and let's see if we can pinpoint a better entry, right? All right, so we'll use our Fib tool. I better do this quickly. And here's an obvious pivot low, and here's your pivot high right there. Use the intraday. Okay, so you can see we're not there yet, right? The last time it got into this area, it bounced nicely. You're looking for a short-term trade in a stock like this. Let it get under 48. Let it get under 48. Back to the daily chart. All right, here's one that has dropped down. This is probably, well, I tell you what, let's put on the Fib to retrace on the daily chart, see what's going on. Yeah, it's testing right now the 38. So the 38 is kind of your first level for Fib retrace. And I'm not a huge user of Fib retrace, but I've been using it more lately. And I like it as a way of pinpointing entries and being disciplined about not getting into a trade too early. But if it dips below the 50 and stays above the 61.8, that green zone right there, I call that the money zone. That's typically where you do see your best short-term swing trades develop, right? It comes down well off the lows. It's over 50% below, over 50% of the uptrend has been retraced, and that's usually a good place to start looking for a reversal. We're not there yet, but you could actually kind of nibble here around 52, and if you don't mind holding through more of a drawdown, you could wait for another test of 50. MSTR, disappointment today because we have calls in the live options room. and we're still in them. We haven't hit, we have not hit stop, but it's a little disappointing, this move. And Bitcoin itself is down. That's part of the problem here, but not nearly as much as MSTR. So there may be something else going on in the company that I'm just not aware of. But I have to say, until today, until today, this guy looked really, really, really good. So you've got a, right, here's your big rounded bottom. Here's your rounded handle, cup and handle, right? Very bullish standard pattern. And the rounded handle is excellent. Huge green stick yesterday on above average volume, and it took out a whole bunch of range highs. Right? If you did something like this, right? It's a breakout. It was in breakout, and then it just snapped today. And to be honest, I don't know exactly why it's come in so much, but it is down here near the 50, the 21. And if we look at intraday support, we can see that there's a little bit of a gap down there at 370. I don't think it's going to get that far, but it could. That should be a support down at 360. There's a good pivot reversal there. So those are some areas where it might come down to and then reverse, but frankly, it doesn't have to, right? And if we can get Bitcoin back on track, we should see this one do really well. I wouldn't buy it, though. If I'm not long already MSTR, I'm not going to be buying it here. I'm going to wait. Let's see. What else can we look at today? Circle. I wanted to show you Circle. There it is. Yeah, so we bought some shares this morning in the live trading room, and I wanted to show you why. So here's an IPO. The main reason why we bought it is, if I can get up there, there's your IPO high, way up there, right? So 300 IPO high. Came all the way down over several days to hit the 50 retracement level, gave an inside day bar yesterday, which is on a downtrend that's bullish. We have an inside day bar and a downtrend that's bullish, an inside day bar and an uptrend is bearish. Then it flushed out a whole bunch of weekends this morning, took out a whole bunch of stops, and started traveling back up again. And that's when we bought it. We bought it at 181, 182, something like that. And if you look at the intraday chart, you're going to see pretty much the same thing, right? Here is your IPO fib retrace, 50 holding, and it was somewhere in this area here that we bought shares. And you know, you can have a pretty tight stop to put the stop underneath today's low, so about 169. And who knows how high this can go. I don't think it's going to go back up to 300. I don't think valuations really warrant that, but maybe 250, 260, something like that. That's a big run. Okay. Last one I'll show you is, well, we're long lift, and it looks very good today, right? It's having a really good day. Here's your pullback, hit the 50, broke out, did a little bit of a flag, and I forget where we put on our calls, but it was, I think it was somewhere in here. Maybe it was even on that breakout day. And here's the follow-through day coming in today on, well, kind of light volume, but I love the price action here. This looks really, really good, really good. So that's lift. Let me think here. All right, I'll do Carvana. I don't really like Carvana, and I'm not long Carvana, but this is all-time highs over here. It had a pretty sharp pullback, and it has been in rally mode pretty much ever since, and it's up today with the NASDAQ down. So Carvana looks to me like it's going to get up above 350, and who knows where it can go, 370, 380, something like that. If you really are looking for a fun trade, put on something like the September 350 calls for Carvana. They're not going to be cheap, but that could really give you a 200-300% return before all is said and done. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the day. I will produce this, put a link in the room, and then we'll get back to trading. Bye for now. See you in a little bit.